Another episode of Bondex live stream. We have a special guest with us today. It's Michael Hiles, CEO and founder of Xtrends. Welcome, Michael.
Actually, it's 10XTS, 10XTS.
Sorry,
No, you're
10,
good.
10XTS.
Hey, good. I'm good. How are you, Tina?
Not too bad. Thank you for taking the time out to meet with us today. Do you want to go ahead and tell our audience a little bit about what you guys do?
Yeah, we're a securities token regulatory compliance market infrastructure provider for blockchain issuance of traditional regulatory securities. So everything from 506 offerings to Reg A's, private equity, institutional, real estate. We work specifically in that space to connect issuers and their investors with secondary markets for regulatory compliance, secondary market trading, and settlement and custody of securities that are designated as a token-based form.
Quite an exciting field, and it's certainly something that's going to boom within the next few years or so. So very exciting to have you with us. If you want to tell us a little bit about what challenges you might be facing in the marketplace now, where you see the trend for what you're doing.
Yeah, there's fewer regulatory challenges right now because we are dealing with specifically that which is without question a security, whether it's a share of a company or a limited partnership in a fund. The rules are very well defined, and it's a very bright line as opposed to traditional cryptocurrencies and utility tokens. Is it an investment contract? Is this a security, not a security? This is specifically where you are issuing a token, but that token absolutely, unquestionably represents a underlying security asset. So it's really from a challenge standpoint, the challenge is the emergence of the market infrastructure with all of the related custodians, the exchanges, broker dealers, banks, people that are traditionally involved in securities offerings, including your law firm, right? Securities attorneys, auditors, to recognize the efficiencies that may be gained by adopting a distributed ledger framework by which the marketplace can interoperate and bring efficiencies over the current challenges in the market, which force things like trade plus 2 days of settlement for a traditional security. And there are many reasons for that, but one of which, the least, is the monolithic, monopolistic clearing of securities that's done at the monstrous market scale level. It's all run by IBM System 36s on COBOL, whereas we now have technologies and decentralization protocols that can instantaneously or in near real time communicate a settlement of a transaction between a buyer and a seller of securities. That's pretty powerful, right? So the challenge is just simply migrating market infrastructure away from the legacy of the way things have been done for decades to adopting and having a confidence of knowing that there's no unclear territory here with these things. It's absolutely a security. It's just a more efficient infrastructure by which to operate capital markets and bringing all of the respective players online.
That's exciting. I mean, and this can go for anything, everything from real estate to medical records to pretty much securitizing anything, even gaming platforms, pretty much anywhere someone can earn a portion of revenue or have a stake in the platform itself, right?
Yes, that's correct. I mean, our underlying technology, we function as right now, a permissioned layer 2 Oracle network, because on a layer 1 public blockchain, it's pretty easy to move a token from a wallet to a wallet, right? And there's not a lot of controversy around that. The problem comes in when you're dealing with the application of regulatory processes. There's traditional workflows, documentation, approvals, signatures, audit checks, compliance checks, things that have to go into that transfer of that information, whether it's an asset or any other form of regulatory transactional type of a process. And it's not as easy to move that metadata from point A to point B. And at present, we still don't store a whole lot of actual native structured and or unstructured data directly on layer one chains. There's been some interesting experiments with like IPFS, interplanetary file system, Filecoin, for example, or Storage has been another one.
Right.
Big Chain DB, right? There have been some very interesting early projects to try to move large scale enterprise data to a natively tokenized, layer one, distributed network. But those
Yeah.
also come with challenges, right? And not the least of which is from a regulatory standpoint, many uses of the technology will be limited for one reason or another, because you cannot expose specific forms of data directly to a public form of network. PCI compliance data, for example,
Correct.
healthcare data, like and even investor account data, right? Which is, really the next phase of regulatory questioning I see coming for these infrastructure companies that are wanting to adopt and use a layer one blockchain. How can you achieve that while still maintaining all of the privacy and the existing legacy, requirements that are still present in the law?
Correct. So, I mean, you have to have a dual component, a hybrid model where you have the private data that stays off chain, but can be called into the layer one when needed to validate transactions. But the private data is sort of stays on the back end.
That's correct. And as long as you're accurately hashing that private data for proof of the data, right? Keep in mind, if
Right.
one tiny little ASCII character changes in the entire body of the data that's been hashed and encrypted, then of course the hash value changes, and you know that there's been a modification to that data. And of course, if you're auditing, like, okay, well, why did this data change? Was it a legitimate record update? Was it, all of that auditability is still native. And then how do you immutably correlate all of those hash values that then become connected and embedded, once again, as an oracle type of a solution to the layer one, so that the layer one smart contract can comply, call upstream and through the oracle to access all of that governance risk compliance information that's necessary to meet a regulatory compliant process. How do you then also immutably prove all of the permissioning and the recordation of the workflows and the logging of who's actually accessing this data, right? Where's it coming from?
Exactly. Well, I would imagine that mass adoption is a big change, monumental change. That when you have more people onto the blockchain ecosystem, your platform will take off, and all of these organizations that are looking to implement blockchain solutions using platforms, they will have more and more adoption. And so, that being said, as you and I mentioned, as you and I chatted the other day, we talked a bit about what we do at Bondex, providing a way for everyday individuals to monetize their data through participation in a Web3 professional network and talent platform. What do you see are some of the ways that everyday individuals can get involved? How, aside from trading crypto, aside from just, being in it for the profit potential, what would your advice be to get everyone else that's just a normal person interested in the technology to get involved in the space?
Sure. That's a great question, because part of me loves the fact that there's such a mass user adoption, wide awareness and appeal of blockchain and tokens and cryptocurrencies and digital assets. The other, maybe more conservative and practical part of me says, well, that's like being excited about email, right? It's just such a foundational layer of technology that
Right.
it's like,
Right.
at what level does it stop being novel and it's just sort of ubiquitous? And we saw this at the advent of the web. I'm an old guy, right? So I was around in the very early, I mean, I was on, sysop chat on mainframes and went through the evolution of bulletin boards and, long before social media came out, right? We were in NNTP news groups and,
Okay.
doing all
Wow.
kinds of, old school things. And, the technology, you know, it just at some level will stop being novel and it's just an expectation that's part of trading securities. So you open up your Robinhood app and you say, I want to buy 20 units of this particular real estate investment trust that owns these apartment buildings or office parks or, whatever, right? And it becomes as easy to incrementally and fractionally trade in and out of those types of alternative asset positions with near real-time settlement, as opposed to, even today going to your Robinhood app and buying and selling shares of AAPL and then waiting 2 days for settlement so that you actually have the money and the clearing and all that, right? Cryptocurrencies
Right.
have spoiled us, right? We're now expecting real-time settlement, 24/7
Right.
trading, real-time liquidity, real-time settlement, right? And it's interesting because I saw, it's not been that long ago, a survey that was done by a very prominent financial publication, not necessarily focused on cryptocurrency, but the discussion was tokenized derivatives of traditional stocks, right? You've seen some of the exchanges that have launched tokens of AAPL shares that are held in a custodial account, right? So think of it as stable coins, right? For
Mhm.
these shares that are in a custody account somewhere. And the 18 to 34-year-old demographic would rather trade in the derivative token of that stock than the actual share of that security separately. And the reason is instantaneous settlement. They want to be able to move in and out of positions quickly, as easily as they move in and out of, Bitcoin or, Litecoin or Doge or Shiba or any of the whatever your token of preference is, right? Bondex, right? The being able to get it right now, and that's where the technology is run past where the traditional securities and the regulatory compliance and the governance and all of these things the law still requires, and the law is not going to change quickly, right? So the
Right.
best thing that we can do is speed up the automation processes around the implementation of the law so that it becomes almost as fast, right? Still probably have a little latency from workflows and approvals and encryption, decryption as you're moving in and out of, enterprise networks, but at least you're not talking about a T+2 or even longer form of settlement when you're buying and selling, these assets.
Well, as your platform evolves, one of the questions that I sort of about is, when you have a security like a stock, Apple stock or a Tesla stock, at some point you get dividends. Well, with Apple, not necessarily with Tesla, but in a securitized token version of a stock, how do you handle that? I'm assuming that currently there is no such dividend payout, right?
Yeah, there's a lot of discussion in the market, and it really does also directly impact a lot of projects that are currently on the table because, for example, a real estate investment trust requires K1s, right? You have to file a K1 for your whatever that
Yeah.
dividend distribution. So who does the distribution, right? You got to go look at the market infrastructure. How do distributions take place? Well, either it's directly from the issuer or it's from the transfer agent, right? The transfer agent also, as part of the transfer agent function, is engaged to manage the K1 distributions, actual payment distributions. But neither the issuer or the transfer agent has treasury services from a traditional banking and custody standpoint. So all of that cash payment that actually goes out, so it becomes a function back to the evolution of banking, as I'm seeing a lot of interest from, banking institutions now, whereas a couple of years ago, banks were like, no, 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 crypto bad, crypto, Silk Road, drug dealers, stay away, danger Will Robinson. And now they're starting to recognize that there are whole new forms of business for escrow, whole new forms of business for custody, for example, that have nothing to do with the Wild West of cryptocurrency. This is just simply using the technology rails as a better process, a more efficient process, and it should open new markets, right? You're talking about making lots of money, and it's great for smaller institutions because nobody's ahead, right? Even the big giant institutions, there's no clear-cut owner of the crypto asset escrow space. Right, literally a small 3-branch institution out in the middle of the Midwestern United States has just as much opportunity to get into those types of business lines and start to intersect with this and create new markets. It's a great opportunity to, and I for one am a big fan of bringing back smaller banking institutions. I like having a local small town bank that I can go in and sit down and meet with the management and have a relationship with them, right? Now, as it stands, we have these giant banking institutions that are a big brand logo and Super Bowl commercials. And, do they even respond to their email requests through the website?
Right.
Very challenging.
Yeah, yeah, certainly levels the playing field for sure. I mean, until at least 5 years from now, clear winners emerge. There's a lot of opportunity for whoever decides to get into the space.
That's right.
So, yeah, I mean, one of the other things we like to talk about is, obviously the crypto market recently has taken a sort of a beating. So, what do you see in terms of a forecast for the next, say, 3 months, 6 months? What are your personal opinions?
Well, I saw this morning, and I don't want to, hard time date this particular
Right,
broadcast from a date, time
right,
standpoint, but I saw this morning that the, Central Bank of Russia now says no cryptocurrencies. Bitcoin rose, right? So, I mean, I think that you're starting to see a bifurcation away from traditional monetary policy news. And I think that the institutional market has grown up a lot when it comes to the asset class. And we just have to keep reminding ourselves, okay, yeah, it stinks that it's off 20%, 30% from the high, but 2 years ago it was trading at $7,000, right?
right.
2 years before that, it was, whatever. So, um, at even 2 trillion in market capitalization for global cryptocurrencies, um, I believe that that's just the tip of spear. Now,
Got it.
what has to
So
happen
the
in order
future is
for there to
bright.
be a yes, very much so. What has to happen in order to continue that exponential expansion and growth? That's probably subject to a lot of debate, but I still think that there's a lot of growth ahead of us for, just as a macro, economic view of the entire asset class. I'm not going to pick and choose winners and losers, for crypto
Right.
symbols. I know what's in my portfolio, but I'm not a wealth advisor, so I can't advise you on those
Right.
things.
Well, this morning I read a very interesting article where it says, unless you have a very specific use case, which is one of the things we're trying to build at Bondex, right? It's not just a token. The token actually function, and a
Mhm.
function that's not uh, tied to real world use case. For so one said there's really that's preventing like of a Google, Amazon, Facebook, or Microsoft coming in and duplicating a layer one. So it's basically all feature driven, right? The users are basically utilizing the token for the features it has and the monetary value that it represents, the volatility up and
That's right.
down. But it inherently doesn't have any moat. So if a Google or a Microsoft came out with a layer one token or a stable token, they already have the user base and they can easily
That's right.
compete with these giants. But if you have, say you're a game company and you also have built a user base using a crypto gaming platform or a crypto town platform where your users are sort of sticky to your platform, then you have something that has a moat, a protection around it. Otherwise, I mean, all the large layer one projects like Solana, Avalanche, you can even talk Ethereum or Cardano. These can be easily replicated by some of the technology giants of today if they decide to.
I agree 100%, and that's why in the advent of a lot of the proliferation of a lot of different tokens and chains and consensus protocols, and they're still they're telephone networks with no users, basically. So the network economic effect is going to come from exactly what you said: the feature set, the functionality. How are you embedding these things? And I was talking to my son last night. He's all excited about the possibilities with getting Call of Duty on his Game Pass because Microsoft bought Activision Blizzard, right, in the past couple of days.
Activision, that's going to be a major game changer.
Yes, 100%, right? And you're already seeing the microeconomics of game, the game tokens and game currencies and these things. And I think that early on, even when Facebook was contemplating Libra, right? Why does Facebook care about a stablecoin project? Well, Facebook Messenger has still to this date the largest install base of any mobile application globally. All by itself. Leave aside WhatsApp and Instagram and I just saw this morning, lots of announcements the past few days, right? Instagram and Facebook are now they're going to support NFTs, and this will be interesting to see what their product roadmap looks like as they're moving towards Meta, the metaverse, which also kind of scares me because didn't we just have a movie called Ready Player One about all of those ideas? Never mind.
Right. Well, I mean, for the past year, we've all lived through the meme stock trading saga, right? Note that for the past couple of days, GameStop, which is the representatives of the meme trading culture, has taken a massive beating ever since the announcement of Microsoft and Activision purchase, because obviously that means they are going to move to the digital forefront of digital gaming, and that sort of leaves out companies like GameStop to be the first mover, innovator in digitizing their game strategy. So because Activision and Microsoft are, can you hear me?
Yeah, I can hear you.
Yeah.
Can you hear me?
Yeah,
yeah, sure.
I lost you first. Yeah.
Yeah, I was just listening. GameStop's interesting. I was a fan of GameStop when Ryan joined the board, before the Redditors got a hold of it. The interesting thing about GameStop is they have the largest database of esports players and enthusiasts in existence. So I think from a marketing machine standpoint, but you're absolutely right. It's going to require, some money moves here by the folks at GME in order to continue to lean in and press forward. I think they have an opportunity in the space. I don't know what their board has decided that the forward strategy is going to be necessarily, but certainly the sector is not going to shrink, and I would still consider them a very prominent consumer brand with a lot of assets under the hood from a market reach standpoint. But certainly their entrance into this space would be very interesting to watch and see if they make a decision to move into some of these crypto asset based game networks and game tokens, utility tokens, game points. Right, just think about the interchange of the game points, right? A problem that exists without blockchain still to this day is loyalty and rewards, right? Can I exchange my travel, my travel miles on my airline for consumer goods, right? There's not an easy, seamless sort of market driven interchange. And I've seen some interesting projects talked about, but to date, even in the loyalty rewards world, there's been a void of, so can one of these players just simply become the middleware layer, right? Kind of like what we're doing. How do you be that mortar between the bricks between this network and that network to interchange game tokens? Well, there's $1 billion
Right.
idea.
I mean, well, here's another one. I know in the past there have been platforms where you can trade in your big gift cards. I mean, every year during, especially during the holidays, consumers are loaded up with gift cards they receive for various stores that they never plan to use or end up using.
Mhm.
So there are platforms, secondary market platforms, where you can sell those gift cards for monetary value. If there was a tokenized platform where you can trade, buy, sell as gift cards in real time, with the with not so much of a percentage loss, because I believe on those platforms the face value decreases by about 40 to 50%. I
Mhm.
think that's an opportunity, something that platform like yours can certainly monetize. So another idea for
Yeah,
another time.
yeah. The regulators certainly have a lot to say about those things right now because once again, moving money across border in the form of gift cards has actually attracted the interest of FinCEN and the OFAC, body of regulation,
Oh,
and
no, no, no.
rightfully so,
I
right?
mean, no, I
Yeah, no,
mean,
no, I
say for
understand. It's a,
example, yeah,
no, you're absolutely right though. I mean, it's a great
yeah,
idea. It's just I think that there are, as I'm observing in that space,
right,
once again, it's not just as cut and dry as like, hey, it's a free for all. I'll trade you these cards. I'll sell you these cards. All that. They won't. The regulators are like, no, 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 no. If you're going to be in that business, you're effectively going to
right,
have to capture data like a bank, right? You've got to
right, right,
be as compliant as a bank when it comes to KYC, AML, and
right.
because I've seen some interesting projects, and then you ask them like, well, how do you handle your anti-money laundering and your BSA compliance? I'm like, what? It's a gift card. I don't need to verify their account. And I'm like, well, okay. Have
All
your
right.
attorney on speed dial.
Okay. Well, I mean, I have to say, I must admit, what you're doing is very exciting. I mean, I certainly feel it's a very bullish project. There's a lot of potential use cases, emerging use cases, and we certainly love to partner with you guys, help you in any shape or form we can in terms of talent, broadening your reach. And I believe our marketing VP Eduardo will certainly reach out to you. And yeah, as we leave our audience today, do you have any last words for them? Anything you'd like to share?
um, well, it's a great time to be alive when it comes to the technology. So, don't be afraid. Obviously, from your audience, they're crypto positive folks that are, certainly leaning into, the idea of decentralizing a professional network and, really taking a Web3 approach, which is pretty cool. I mean, it has a lot of implications, from certifications and identity and even upstream into HR systems, I guess, like being able to, be an identity passport for, job, records and those kinds of things. I can see lots of upstream intersect. So, no, I think it's great that folks are interested in leaning in. And don't hesitate to reach out if you're looking at raising capital for a project or if you're a fund manager. We mostly work with institutionals. I'd like to say that we work with, small, angel stage type, idea and a pitch deck sort of, but it's just the costs relative to where you're at in the development continuum. It's a lot harder. We
Right.
do work, principally with institutional, later stage companies, because those are the companies that are closer to the secondary market and trading. So, if
Right.
you're an investor sitting on assets that are presently illiquid, you know these types of conversations are a path towards providing you with liquidity out of an otherwise fairly illiquid asset class, and do your homework, and we're happy to answer questions.
Awesome, Michael. Well, I mean, everyone listening in, please go visit their website. It's an exciting platform, and I'm sure that there will be lots more we'll hear in the future, and would love to have you back at some point in the near future. Thank you so much for taking the time today, Michael.
I appreciate it. Thanks everybody for listening in, and thanks for lending us a little bit of your brain space this afternoon.
Great. Talk to you soon. Take care.
All right, thanks.
Bye bye.